Welcome back. There is still no relief from the impact of inflation, and it's cramping our style in more ways than one. From your summer vacation with your family all the way to your lifestyle and retirement. And now analysts are saying higher prices are having an impact on how we're saving. Our financial contributor Brian Mirau with Mirau Capital Management joins me now. Brian, costs on everything going up, so what should investors and retirees be thinking about doing right now?
Well, Mark, right now we have a lot of uncertainty that we're facing. It's easy to see prices going up everywhere, from filling up our gas tanks to shopping at the store. It's just costing more out here. And you need to be as efficient as possible to control the things that you can control. Now, here's a few items that you can check off right now and make sure you pay attention to. The first thing you want to do is you want to watch your expenses. Do you have a solid budget? It's very important to be organized in this area of your life and ask yourself, are you dripping nickels? And you got to also watch for your fees and your expenses. Are you paying any unnecessary fees and expenses in your financial accounts? Now, if you own mutual funds or certain types of annuities, you may be paying unnecessary fees. We can help you check on this. You also want to look at your risk tolerance. Have you done a risk assessment? If you're not 100% sure your current risk tolerance lines up with your current investments, you need to do an assessment. And we have to try and maintain growth in our savings and investments to combat inflation.
Brian, the Commerce Department says personal savings rate has fallen because of inflation, and that our personal savings rate in the U.S. has dropped to levels we haven't seen since 2008. So why can this be a red flag?
Well, Mark, inflation is red hot right now, over 8% and rising. And that causes us to lose buying power. With goods costing more, many must tap into their savings to bridge this gap. And this is a red flag, because eventually consumers stop purchasing whatever they have been purchasing because they simply can't afford it. And that can be a bad sign for economic strength and trigger recession indicators. Economists have a definition for this, and they call it demand destruction.
All right, that idea of maintaining your current lifestyle is probably pretty important for everyone who's watching, that you help with retirement. How do we create a retirement income strategy so we don't have to cut back and pinch pennies?
Well, Mark, you have to have a game plan for your income, and this is especially important in retirement. Taxes and market volatility are two areas of an income plan that you can have some control over. There are tax strategies that could really benefit you in retirement. Maybe you want to look at a Roth conversion strategy. Also, you want to make sure that you elect your Social Security at the most optimal time. If you're pulling income off your investments, you need to make sure you are not too exposed to market volatility. And there are tools available that can still give you a reasonable rate of return without being exposed to market losses. Now, Mark, one thing we're doing today is we're offering a no-cost, no-obligation retirement income and risk analysis to help our viewers. And this will help you figure out how much you're going to need to achieve the retirement that you've been dreaming about. And if you're not in retirement, it's still important to make sure that you are on track. You can give us a call at 888-668-9327 and ask for your risk and income analysis. And you can also access the Will a Recession Rob Your Retirement Guide. And both of these are available on our website at www.mirocapital.com/TV.
ABC 7 financial contributor Brian Mirau, as always, thanks for joining me.
Mark, thanks for having me today.